A big surprise from the Reserve Bank of India, higher than expected rate cut of 0.5%. So will it result in cheaper loans for you and me, and will it help revive growth? Hello and welcome to this special show. I'm Shweta Rajpal-Kohli. Joining me on the show, Dr. C. Rangarajan, the chairman of the Prime Minister's Economic Advisory Council, to talk about the way forward for the economy post the RBI rate cut. Also coming up later on the show, a special discussion on what the rate cut means for you with Harshvardhan Rungta, the CEO of ApnaPaisa.com, who will be taking questions on you on interest rates and home loans. But first up, a quick look at what prompted this big rate cut and what bankers and policymakers have to say.
We decided to reduce the repo rate under the Liquidity Adjustment Facility (LAF) by 50 basis points.
The first rate cut after 3 years, and a bigger than expected one. The Reserve Bank of India today slashed key rates by 0.5%, but warned there is no room for further rate cuts.
These considerations inherently limit the space for further reduction in policy rates.
So will your loans get cheaper, and will your EMI burden reduce?
You would see a reduction in interest rates. Clearly, it will have to be across both deposits and lending rates.
Seen a change in the monetary stance, which is clearly aimed towards ensuring that we get growth back, and to some extent an understanding that there has to be a reducing bias in interest rates.
But besides the lower home loan rates, consumers have more reason to rejoice. That's because the RBI, in order to end this discrimination between old home loan borrowers and new ones, has also brought in a new clause asking for the prepayment penalty charges to be abolished completely, which means that if you're on a floating interest rate regime, you pay no prepayment charges. You can simply prepay your home loan and also switch to another bank that may be offering a more attractive interest rate. But RBI says it cannot give up on its fight against inflation. Prices still remain high, and there are risks to inflation like high fuel prices.
The monetary policy announcement should help in investment revival and contribute to strengthening of business sentiments.
I think it's a good signal. Many more things have to happen in the course of the year, but I think it's a good way to start the year.
Experts say the RBI has done its bit to propel slowing growth. The action now needs to shift to Delhi to give the economy a further boost. With Ira Duggal, Shweta Rajpal-Kohli, NDTV. Let me go straight across to Dr. C. Rangarajan, the chairperson of the Prime Minister's Economic Advisory Council. Dr. Rangarajan, a steeper than expected rate cut. What, according to you, really prompted this bold move on part of the RBI?
It's a good decision. The Reserve Bank of India was confronted with two sets of facts. One was the fact that growth was slowing down. In fact, the industrial production was weaker than expected. On the other side, while wholesale inflation is still high, the non-food manufacturing inflation, which is a reflection of the demand pressures, have slowed down. So taking both factors into account, the Reserve Bank has decided to give a push for growth, and therefore decided on the reduction, which is somewhat more than perhaps expected by the industry even.
Right, Dr. Rangarajan, but what has surprised most is that the steep rate cut has come at a time when inflation is still close to 7%. Some are saying it may be too early and too much. Can we say RBI's focus has now shifted from taming inflation to boosting growth?
No, that is not the way to interpret the decision. I think the RBI continues to be worried about inflation. Their forecast of inflation for the current year is around 6.5%, which is still way above the comfort level we have been accustomed to. I think the Reserve Bank has very clearly indicated that the scope for further reduction in the policy rates is very much less, and any further reduction in the policy rate will depend upon the behavior of inflation. Therefore, inflation continues to remain one of the major concerns of the central bank.
Do you have the NDTV Profit app? All the markets, all the news in your own homemade, ready-made portfolio available there for you.
We will right now answer what you should sell, what you should buy when markets are down.
Download it at ndtvprofit.com/apps. Get the best app from the channel you trust.